Hi, my name is Chaster Johnson. I'm the co-founder of Stockteamup.com and the Stock Boss Up app. I'm here today with Jeff Walters. Jeff is a longtime friend of mine. Has been hugely helpful in Stockteamup and the Stock Boss Up app, and I always go to him for certain investment wisdom. So I'm so excited to share that with everyone today. Uh, like and subscribe our video and follow us on Twitter at Stockteamup and also on Facebook. All right. So Jeff, I guess a little background. What's your favorite kind of investing, and what kind of investing are you doing right now?
Well, my preference is swing trading, and that's and trend following. So when market is in trend, and you can generally hold positions for a couple hours to really a couple days. Typically, would be my preference, but a couple days to maybe a couple weeks. So try not to day trade. I find that if I get too much into details, I tend to see things that patterns that aren't really there necessarily, and so I. I know plenty of people who scalp, and that would be intraday trading, make a lot of money. But, for me, the best thing is those trades that are typically around a couple days to maybe a week or two. And
Yeah.
then I love the trend following. So, basically when the market is in a little bit more predictable pattern, with sort of measured moves, kind of moving a little more smoothly, that's definitely my preference. I find that to be the easiest time for me to make good decisions. Not to say it's the only time to make money. In fact, for now, where we are right now in middle of July here, 2020, the market is definitely a little bit of a sideways pattern, at least in the short term. So for the last couple days or weeks, you can definitely see a little more sideways action, which is a little harder for me to trade. And then lastly, as you mentioned in the intro, I do like to trade options, and I mostly trade fairly simple things, maybe some combinations of options, nothing too extremely complicated. And I try and keep it simple because with options, as you probably know, if you really get into the details of the Greeks and everything, get really complicated. And I would probably never make a trade if I, looked at a single aspect and angle of it. So I try and keep it relatively simple, and sometimes do a little more complex things like spreads, some vertical spreads or diagonals. So
Awesome.
hopefully that helps.
Yeah, that's good. So a lot of people that use the Stock Boss Up app, they they do ask about other exotic investment vehicles. Options are derivatives. Uh, I always try to I always try to steer them clear of it, not because I don't think they can do it. I just think that they should learn how to do stock investing first.
Right.
So I guess with that background in mind, I think I think people should be aware of options and understand what they're doing because they do affect the market. So I guess if you're a new investor and you now understand how the stock market works and you made your first investment in some crazy stock like Tesla or whatever, and now you are curious about options, what kind of advice would you give them to start?
So I'll tell you one of the biggest things, and the thing that if you watch a video on YouTube or you read something old-fashioned like a book about options, you can always cherry pick out these prime examples to show what happened in a real options trade or what would have happened. But one of the hardest things once you actually start trading stocks, you're looking at your charts if you're doing technical analysis, and then you're making an options trade. But one of the hardest things is the liquidity and the volume and the open interest for options. So you may find a perfect setup. I find perfect setups all day long for certain stocks that I would love to do an options trade on, but there's not enough liquidity or interest in those particular strikes or those option prices. So I don't want to get into those trades because, and again, I don't want to overcomplicate things, but if you've ever seen the spread between the bid and the ask on an options, it might be very wide, or there may not be that much interest in that particular option. So the trade doesn't work for me because if it's hard to get into, it's definitely going to be hard to get out of in most cases. So while the trade looks good on paper, on the chart, it's doing the things that you want to do, you may not be able to trade options on it, or you may be taking a little bit more risk because it's not a heavily traded option. So one of the things I would do is I start with the options that also have weeklies, And so if there's a weekly expiration for the particular symbol that you're looking at, if there's a weekly, then there's generally a little bit more volume. There's certainly probably more volume in the monthly options for that particular symbol. And that's probably a better place to start. So, starting with your household names or your common, stocks that most people know is probably good if you're looking at the options or learning options, because there's probably more sort of action, if you will, that are in there, and you'll see tighter bid and ask on the spread. And that's definitely something, if you don't understand what the bid and ask are, then you're definitely going to learn something like that. If you're familiar with options, then you know exactly what I'm talking about.
I'm really excited because our goal is to get millions of people to understand what the bid ask spread is. It's gonna be great. But I guess in a simpler term, I get exactly what you're saying. I've missed so many opportunities because it looked so great on the platform, but then you try to actually put the trade in, and no one wants to take the other side.
Right.
So I guess for people that are new to investing in options,
Mhm.
it'd be like, crazy example. You have this awesome Beanie Baby, and you go onto a magazine, and you're like, "Wow, this Beanie Baby's worth $200. I want to sell it,"
Right.
but there's no market for it. No one else wants to buy it from you, and this
Right.
happens all the time in options, like Jeff said, because people have, the platform shows you, and correct me if I'm wrong, Jeff. I'm not 100% certain on, but the platform will show you the last bid ask. Is that
Mhm.
correct?
I think it's probably it should show you the bid, ask, and the last. So,
Yeah.
sometimes it'll tell you what the last price was and then the bid and the ask on either side. And that's reasonably what you should approximate to pay. Of course,
Yeah.
it matters if you make a limit or a market order. So, the market makers will still, kind of grab those market orders, or, if you put a limit order in, you'll have to wait for that. So, I mean, using a real example, if the option you want to purchase, let's say you find a stock that you think is going to go up and you say, well, I want to buy a call. That's the simplest thing, right? If that call is, if the last price was $1, but the bid is 50 cents and $1.50, that's a dollar wide spread. So you have to, if you just put a market order in, you're going to get the worst end of that. If you're buying it, you're only going to get, or you're going to pay more. You're going to pay the $1.50, and if you were selling it, you're only going to get the 50 cents. So you really want to look for those tighter bid and asks, where it's a little bit closer. You're never going to get it to the penny unless you're doing something like the indexes or something with tens of thousands of options traded, daily in a particular thing. But most stocks, you should be looking at maybe a 5, 10, 20 cent range for those stocks that are under $100. I mean, obviously, when you get to, if you're talking about Tesla, the spread is going to probably be more than 5 or 10 cents. The spread might be
Yeah.
20, 50 cents, but you're talking about $1,000 stock, or Amazon, could be in the dollars. So you just look at it as a percentage. And I think if you go and you look at the options chain for the NASDAQ 100 stocks, if you just went through each one and looked at the options chain, you get a real good education about what has tight spreads and which doesn't, even if you look at 50 or 100 stocks or the options chains.
Full disclosure, I think I forgot to mention this. Jeff taught me options, and he forced me to learn about them. So hence why I went back to him for this video.
See how that, if that's a good thing or a bad thing in the long run. But
I will say, I was very scared of options before talking to Jeff, and I think you don't have to invest in options. You never have to, but I think everyone should understand them, honestly, because I think once I understood what was going on and how it affected the market, it really makes sense to learn them. So Jeff, I again appreciate that.
And
Uh,
and Chester, if I could, I'll just share a few things I know to be true about options, right? Because there's a lot of videos out there and there are a lot of books out there, but there are a couple things I know to be true with options. Compared to just trading the stocks, with options, there are ways to make money when the stock goes up, down, or sideways. And when you're just long a stock, you can really only make money if it goes up, lose money. You can talk about dividends, and that's fine. So there is a few more ways to make money in options. There's also more ways to lose money in options. But if you know what you're doing and you're educating yourself, then you have more tools in your toolbox. The other thing too is, your returns can be greater, so just owning a stock, you're sort of limited in what your returns can be for what you're putting in investing or at risk. There's a flip side of that, of course, too. So those are a couple things I know to be true about options. And the last thing, and you mentioned this earlier, Chaster, if you can't consistently, right, greater than 50% of the time, if you, whatever measure you use, whether you're fundamental or a technician, if you can't consistently predict the direction, then options aren't really going to help. Most of the option trades aren't going to help. You really should master whatever it is you're doing to analyze. If you're a value investor, you should be right more times than you're wrong. Same thing if you're using charts and technical analysis. So master that part first, then figure out what options can do for you as additional tools. But if you're not consistently, picking the direction of stocks, whatever you use, then options are just going to help you lose that money faster.
Let's say someone wants to get into options.
Mhm.
What are 3 things they have to know before they do their first trade?
So probably the very first thing, it's not super fun or sexy, to do it, but it's purely the mechanics of it. You have to talk to your broker and you have to get set up to do options. So in most cases, you can't just open an account and start trading options. So there's different levels of experience that all of the brokerages apply to the accounts, basically. So you have this additional paperwork with your broker. And then one of the other things I would just say is, um, we used to do this with the stock meetup group. So, and you mentioned our background. We used to have a stock meetup group. I would tell people, look, and I think I might have even done this with you, Chester, find a cheap stock, very liquid, something that trades a lot. Back in the day, so 5, 6 years ago, it was Pandora, right? The radio station. Everybody kind of knew it, could appreciate it. But, I've told plenty of people, start trading options on Pandora. At the time, it was about $7 a share. You could trade options for like a quarter, 25 cents. So buy one call, it's only going to cost you 25 bucks, like it's not the end of the world. It's not going to blow up your whole account. You might not make a fortune, but get used to placing the orders. And I think, so just start small, and then work your way up.
Absolutely. So let me ask this. I think we should both answer this question because I think it'll be interesting. What is your favorite option strategy, and how can and the best you can explain like what's happening with that trade?
So I'll go back to something you hear from a lot of people. So you'll hear, if you're, and I'm speaking, purely now to the audience, not necessarily to you, Chester, because I know you know this. You'll hear people say, the only people who make money in options are those that collect the premium, right? So nobody ever makes money paying the premium. And I don't know that to be true. I understand the rationale behind it, because a lot of people, they buy calls and they just buy out of the money calls because they're cheap, and then they do lose more money. But I don't think that's a universal. Like, one of those things I know to be true is that you can make money buying options or you can make money selling options. So in terms of one of my favorite strategies is a put spread. So this is where I would be long a stock or willing to be long a stock, and I buy essentially a naked put or a put. But when I mentioned the spread, I will actually sell a put, being willing to take the stock, but then for protection and to minimize the amount of margin in my account, actually buy a put as well. So, so it minimizes the margin and it's downside protection in case it drops to a price I'm not comfortable with. I'll give you an example. So back about a month and a half ago, I was willing to buy Salesforce before earnings, and I would have paid $165 a share for Salesforce, and I thought the price should have been higher and that it would go higher. So at that point, I was willing to sell a put for CRM, Salesforce, to buy that stock at 165. And it was trading a little bit above that. It was 168. So I collected premium and obligated myself to buy 100 shares of Salesforce at 165. Now that would tie up 16,500 in the account. So what I did was, to minimize the amount that I would have to potentially be on the hook for, is I bought a spread, and for that downside protection, I bought a 160 call, if you will. So I collected a little bit less on the premium, net premium. I still could have that option to buy the stock at 165, minus the premium that I collected, and I had the downside protection. So essentially, a bull put credit spread is one of my favorite things because it lets me get into a stock if I want to. It lets me even out the trade if my thesis changes and I suddenly turn on the stock. But I can then get into the stock, do covered calls, do other things with options or the stocks itself, and just something I like, especially for stocks that I like, stocks that I don't mind holding and owning. It's a great way to get into stocks, just like the naked put would be. But now, of course, you've got the other protections. So uh, that's probably a lot for somebody who's new to options. You can probably go and look those things up. So just go look up bull put credit spread, and there's lots of good information out there to show you the mechanics of that. But that's one of my favorites, especially for stocks that I'm bullish on and maybe even considering holding. So how about you, Chaster?
That's absolutely funny. So we didn't plan this. I just asked this question randomly. I was also going to say vertical put spreads, so
Oh,
I'll try a different one. I really was going to say that. I didn't think you were going to say that one, man. I don't know why I didn't think that. It makes sense that you would say that.
well, let me ask you a follow-on question then. So
Sure.
it has a corollary, or the opposite end of it would be a bear call spread would be similar, just in the other
Yeah.
direction. I find myself doing less of those because there's something about the put spread where in my mind I can always say I can take the stock, but the call spread doesn't really have that. I mean, it functions similarly, but on the opposite side. But I mean, so how do you feel about bear call spreads? Because some people might think they're similar in some ways, just on the other side of the chart.
I would say that because it's a directional, I guess, this is interesting. I guess I'll answer that in a bigger, broader sense.
Okay.
I don't like the opposite direction, but not because, like, technically it's the same thing. You're completely right. But, you know, on average, the market makes about 7% a year going up. So I feel like, on average, I'm probably just going to lose that if I don't have some really solid knowledge. And I'll even tell you, you heard me complain about this. I've complained to you for years that Boeing was super overvalued at like $300 to $400, and and then I was like, I'm really excited now because it's now super cheap at $100, and I and Boeing is this weird stock right now, which it shouldn't be, but it's this weird stock that there's a lot of emotions involved with it, and the reality of it is just gone. There's no reality of what the price should be because no one really knows what's going to happen in the future. So I say all that because I would have loved to do the opposite direction on that one, but I would have gotten eaten alive. I mean, I did. I actually, this. I bought some puts on that. I was thinking it was going to go down, so I just bought some naked puts, thinking this is going to go bad, and but it didn't. It kept on going up until it crashed. It kept on going up and then crashed $300. It's just insane. It's just you can't. You are wrong until you're right, and you may not be able to be wrong long enough to see the the time when you're right. So that's the real reason why I don't like don't like doing the opposite direction.
Fair enough.
Yeah. And, my second favorite would probably be a boring leap call. I really like those a lot. I've probably won. I'll probably win like 8 out of 10, 4 out of 5 of those. But I very rarely, very, very, very rarely will do them because I will never be that. I won't. I only do them if I'm very confident of the direction I think it's going to go. So I might have only done 10 in my entire life. Uh,
Well, and you hit on something there that's a subtlety that people will figure out, that when you're long an option or you buy the option, you generally want as much time as possible. And the Leap provides you that. And sometimes pretty cheaply. If you look at a Leap for an August, so we are in July, expiration is next week. But if you were to look 45 days out, you may be looking at an August expiration. It's sometimes surprising that the January expiration really isn't that much more expensive, but you have so much more time. Instead of 45 days, you have 150 days or 200, whatever it is, 200 days till January. And then on the other side of it, though, when you're short an option, you generally you want time to expire quickly. That's what you're looking for, is that rapid time. And you don't. Very few people. In fact, Chaster, have you ever sold or what's the percentage that you bought leaps versus sold leaps? Very rarely are you willing to go further out. Or I actually have one now, so I I was thinking about it. I said, wait a minute, I actually sold a long-term leap, but I would tend to buy them more than I probably sell them in terms of leap because of the time. Like when you're on the seller side, you want as little time as possible, and when you're long, you want as much time as possible.
I've dabbled in it. I've dabbled on selling leaps, and I won't stay in it long though. I've noticed that, like, I gave up on them, to be honest, but I did dabble in them, and I pretty much I guess I should say something quickly. A leap is a 2-year option. We get so much into our technical stuff. A leap is a 2-year option.
Well, a
Um,
leap would be a year, at least a yearly, right? So if you
at least a year. Yeah, excuse me. Yeah,
or 2-year leaps, though, which give you even more time. Yeah.
yeah. I typically do 2-year leaps because I'm that conservative. But I found that I pretty much will, like, the price will go up on it, and I'll get out. I don't like to. I don't want to wait for it to go back down, and the whole option just you know goes against you. So I gave up on them. I typically, like you said, I just buy a leap straight up, and
Well,
and
and
yeah,
in reality, for a lot of the stocks people are going to look at, a leap would be phenomenally expensive. So just in the news here, in a stock that I follow, Roku, for example, I don't have the options chain in front of me, but I'm sure like an option on a Roku or even a more expensive stock, like I mean, an Amazon Leap must be like phenomenally expensive. So it's not a practical vehicle for the very expensive stocks, where there's a lot of volatility because they're just going to be phenomenally expensive
yeah.
unless you're collecting the premium at a very low price that really have conviction about, like a longer term price level or something like that. So
I've learned, and this is something I've learned, and I don't recommend anyone doing until you've just experienced a few times. But when I'm successful with Leap, I've noticed that they'll get super cheap from the norm, right? Because they usually are really expensive, but they'll usually get super cheap from the norm because the underlying asset is crashing. And what my rule of thumb, this is a pure rule of thumb, don't even take it as gospel. It's probably going to be wrong if you try it. And if I try it next time, we'll be wrong. But you know, when I feel like, okay, I looked at my numbers. Now the numbers are showing that it's cheap, right? And the leap will be reasonable. I will then wait another 2 weeks, and let the panic continue. And then I'll get into it. Literally 2 weeks. That's actually what I did during the COVID-19 collapse. I was like the first buzzard or the first alarm hit, and I was like, "Ooh, this is feeling pretty good." And I just waited 2 more weeks. I ignored it for 2 more weeks, let more fear go into the market, and typically that will help, and the underlying asset might be at the right place. But the reason why I like that fear part of it is because then the pricing of the option will be changed significantly, and then that premium that you usually have to pay will go down slightly. So fear helps with that. Is the moral of that story.
that's really only gained from experience and live money accounts. Really watching the price change of options. I mean, obviously it's all based on mathematical formulas, and there are ways to back test that and see that historically. But there's nothing like actually owning one and really being invested in one option. So I always think it's a great thing. I just make sure that you have the money management first and foremost above all else, and especially if you're in learning mode, consider anything that you're placing a live trade on, whatever the value of that is, $100, $10, $1,000. Make sure one, it's money that you can lose, and that it's part of your education should it go totally south on you. So if I told you were going to 100% lose whatever it was, you should always sleep well and be comfortable with that particular amount. Not that you want to lose it, but that it's not going to hurt you if you do lose it, and you have to chalk that one up to your education.
And that's a good point for everyone that's still on the video watching to the bitter end. I appreciate it. But two is, after Jeff taught me how to do options, I lost my first 3 trades. I lost them, and one of
What
them
a
was
good,
a what? What'd you say?
good friend I am, right?
Yeah. Try this strategy out. Oh, I lost 3 times. And one of them was a call. So I mean, the whole call was gone. But overall in my lifetime, I've made more on options that I've lost, by a
Okay.
significant amount. So it's worthwhile to learn, but don't destroy your account learning. Absolutely. Well, Jeff, I really appreciate it. Thank you again, everyone, for watching. You can follow us on Twitter at Stockteamup, and you can check us out on Facebook as well. And of course, check out the Stock Boss Up app and also Stockteamup.com. Jeff, thank you so much. I always love talking to you about investing.
Same here, Chaster. Always good. Hopefully, we'll do it again soon. And thanks to everyone for hanging in there for 20 or 30 minutes. Appreciate it.
Thanks.